Hey everyone, welcome back. My name is Levi Woods. This is Drawbridge Finance. It is Tuesday, April 15th. Hope you're having an awesome day. I know I am. My sign is green, which means my account is up. Pretty typical in this high IV environment. Got lots of trades on, lots of positive theta decay going on. So it's been pretty fantastic. As per usual, that's my phone binging, telling me that I've made a Shopify sale. Good timing. Let me turn that off. But if you haven't checked out my Shopify store, you can head over to drawbridgefinance.ca. You can see all of my spreadsheets that are available there. And of course, my patrons get a limited number of these spreadsheets automatically. So if you're thinking about becoming a member of the Patreon, you can head over to patreon.com/drawbridgefinance. You can sign up there and you can do it for free just to get on my newsletter if you like. I send out insightful emails, usually just once per week. It's not a super heavy duty thing. I don't like to bombard people with too much info. It's why I don't stream every day. I don't think it's relevant for people to have to get in every single day and spend time with me. I mean, I don't think it's worth my time to do that kind of thing, even as a YouTuber. So let's, if somebody could let me know that I am working, that would be fantastic. I am a one-man show here, so it's, I say I've got 10 people online. It looks like I'm working, but if somebody could say hello and let me know where you're watching from. Thanks, Jamie, for letting me know. Appreciate it. Let's get into what's going on in the market, and then we'll just take a look. Oh, that's no good. I got a new splitter. Why are you not showing my screen there? Mine died last week. I had to go get a new one. And now you're saying you're not gonna share my screen? Just give me one moment here. Let me see if I can get that sorted out. Can you guys hear me now? Sorry, my splitter died last week. I replaced it, and now look, now my screen's gone completely blank. This is not good at all. I'm trying to show you something, but as you can see here, I'll show you what I'm seeing. My screen right here that I normally look at for these streams is just gone, and it has something to do with when I'm streaming to YouTube. It has, like in data tests, like you test it a bunch of times, it's fine. As soon as I go live, this screen is just dying. Just frustrating thing for technical type of things. So I'm sorry that you guys can hear me. Let's talk about, let's do this the same as we did last week, which was no screen. We will get into what's going on in the market. I'll just give you guys a quick rundown, my thoughts. And if I can even get anything, if I can look at anything here, it would be fantastic. You guys know what this is like, right? When you got like it's just a fail. You're like, can't get it to, it works great when you're not streaming, and then it just stops working as soon as you're streaming. I don't know if anybody out there streams like I do, but okay, I'm gonna give you a quick rundown. I've got TradingView open. We'll take a look. Thanks for letting me know. Sorry, homegirl, this is not usually how these go. Last week we had a technical glitch as well. My screen is just flashing on and off. Anyways, SPX marking right now 53.96, down 0.17%. NQ trading marking at 18,934, down 0.01%. Russell 1878, down 0.15%. We got the VIX at 29.97, down 2.65%. Gold is marking up 0.5% at 32.26. US oil down at $61 a barrel. US oil definitely has had that little spike. It's had a spike up and then a drawdown. I think this is a good time to go long oil. This is when I would be looking to sell puts or put spreads. So that is a bullish momentum on US oil, even because it's just at the bottom of its channel, which is pretty typical. Apple trading at 202.3, down 0.08%. AMD up slightly at $95. And, tech just in general, Amazon down 2%. Oh, look at that. My screen came back. Can I? No, it's turning off again. What else do I have on my list? Tesla trading at 252, basically flat on the day. Walmart trading at $94, down 0.3%. Bitcoin $84,545. Can you guys see that flashing on my face? My screen going on and off? It's fantastic. Why don't you guys throw some trade ideas at me and we'll just talk through them. If you have any individual stocks that you want me to look at, we can look at investing.com. We can look at Seeking Alpha. I can go over kind of some of the technical analysis, even though I can't share my screen with you. We can take a look at those things. We can talk through how I might be looking at different scenarios. In general, when I'm looking at the S&P 500, I feel like we're in a bit of an area where we're in a consolidation period. The point of control over the last couple of trading days is below. We're right now, the SPX is trading at 53.96, and the point of control is at 52.65. So that's 135 points below the current value, which means that we could see some rather rapid movement down to that level, about that 135 points down. This generally means we get into a choppy period of time. So this lasts a couple of days. The VIX still marking at 30, which is extremely high. This is a good time to be considering putting on iron condors and things and trades that are high volatility plays. So if I was bullish, I would be looking at doing out of the money bull put spreads. I may even consider buying a portion of that put spread back with a bearish put spread above it. What that does is it gives me a profit profile that allows me to have a profit tent below the current value and make money if the stock goes up with no risk, because that's where the president is basically telling us that the stocks are going to go up. So, there's a hard time to judge as to whether or not we should listen to him or not. But he has been kind of forthright with information for us and basically tweeting out and saying, hey, prior to the big crash, he said, don't look at the stock market for the next couple of weeks and, just ignore it. And then market crashed and, because of tariffs that he implemented, and then the stock price recovered right after he said, today would be a great day to buy DJT, which is his Donald Trump Media Group stock. Was this an indicator that he's just saying in general, we're going to release these tariffs and everything's going to jump up? We saw that tremendous movement to the upside. There's quite a bit of volume happening as well, which means that potentially this is dip buyers. So there's either big institutional traders that are doing a lot of like swapping. They're doing some trades and we're just cycling through the trading, buying and selling for small gains, or the loading up on larger positions. Now, there's still a ton of risk to the downside. So I'm not really playing. I've got a couple of unlimited loss trades to the downside. They're short puts, but for the most part, I have bullish positions on, and I'm looking for that market to recover slightly. keeping that theta decay positive so that I'm not dying while I'm holding these things. I also do have a bunch of long puts in case we go down. So my profit profile on my account kind of looks like a big, it's not really like a W, it's like a U shape or a saddle shape. So if the market goes up, I make money. If it goes down, I have a small drawdown relatively comparatively to what others might be exposed to if they had a more linear stock direction, which is like buying stock in general. My screen is on. Do I dare push the button? No, it's still not working. It's weird. It's like it's showing me, but it's not showing you. Unfortunate. Okay. Why don't you guys throw some tickers at me and we'll go. Jackson, hi Levi, Burger King guy is here. Hey Jackson, good to see you. You know, the Burger King here in Kelowna, which has been at the corner of like, there's this mall in the middle of town. The town I live in is really silly, actually. It's just basically a highway, and then all the infrastructure is on both sides of the highway. So this traffic is terrible, and there's just businesses like in a 3-block radius on either side of the main highway, and it's really long. It's terrible. Right in the middle of British Columbia. So this is where like a truck route where there's tons of traffic kind of flowing through the valley. It's a beautiful place, but it's a weird layout for the city. The Burger King that's kind of like right in the middle of town, like just an absolute prime spot. And I don't think it's been updated since I was born, is now for sale. I saw the sign yesterday. I thought, oh, boy, that's interesting. I wonder what's going to go there, because it could be just like a monster tower of some sort. I am waiting for, there it is, John. Thanks for being the guy. I'm waiting. I'm telling you these stories because I want to hear what stocks you want to look at. If you guys don't give me information, I don't have anything to talk about. We're going to talk about Robinhood right now. I'm going to pull up the investing.com valuation, and we're going to take a look at it. One of the things that I'm loving about investing.com relative to other companies that I use for data sources, and there is a link in my description. If you guys want a super good deal on it, there is a promotion coming up. So use my link to click over, and then in a couple of days time, I can't tell you all the details yet, but I'm letting you know now that using my link, there's going to be a promo coming up soon. If you're on my mailing list, I'll be sending out that promo once it actually starts, but you can use the link anytime. You can go and check it out, and then in a couple of days, that'll go live. So one of my favorite platforms. Investing.com, we're looking at HOOD, H-O-O-D, ticker, and the current price is $43.95. Now the fair value is marking at $27.88. What that means is that from a quantitative analysis, the fair market value is 36% lower than the current price. Generally, how I use this information is I look at that and I think, okay, well, sure, there's always a chance that we could trade away from that fair market value. We could move up, we could move down. You know, those are different things that could happen in the stock price. But in general, I want to buy things when they're at a good valuation. I want to purchase it when they're low, not when they're high. When the stock's trading at $44 and the fair value is around $28, that's when I would kind of stay away from like a long delta position, and I might look at putting it, selling puts, or even buying some bear put debit spreads in those underlying. So that's something that I might consider doing, because if the stock did drop closer to its fair market value, then I would want to make some money. So I want a profit tent below the current price. I don't want long delta. Now, again, could go up. It's the stocks sometimes are irrational. So let me know what other tickers you want to, oh yeah, AF, thank you for saving the day here. We've got Tesla requests. We're going to take a look at that. And I'm also going to, I wish I could share it with you. Just going to look at Hood's chart before we go on to, before we get into talking about, on the 1 year chart, Robinhood is up 155%. On the 3 month chart, it's down 3.5%. On the 1 month chart, it's up 4.57%. generally that means we're moving in a sideways manner right now. If we were to look at that 3-month chart, it's relatively flat after this large run up that was kind of started in October of 2024 and peaked in February of 2025. So we saw a massive bull run, and now we've seen a pullback. We've kind of got it like a W formation going on, but I would expect that we would have some sideways movement in that and I would be looking for neutral trades or with a profit 10 to the downside, and that's based on just those portfolio metrics that I mentioned before. Now let's take a look at Tesla. Current price is 251. The fair value is 243. So this is an example of where it's trading right near fair value. And again, this is where I often see consolidation. So similarly, if we were to look back at the chart in October of 2024, we were trading around 213. We hit the peak December at 440 a share. Now it has come back down. It is definitely broken out of the downward trend that it was in. So we saw a downtrend from December that kind of bottomed on March 10th, which is just over a month ago. And then when it rallied back up, we actually saw that break out. And what that's caused is it's causing it to move sideways now. And part of the reason that it's doing this is because it's closer to that fair market valuation. If you went back and watched my streams when it was at 440, because I stream every week and we often talk about Tesla, you would see that we constantly look at these metrics, and we can see that the price was going to be around 240 or 250. So the likelihood was that it was going to come back down. This is why we use that type of data as traders. So now that it's trading near that range, this is when I would just put on very, very simple iron condors. I would go 45 days. I would, of course, pay attention to earnings. I don't really want to trade iron condors over earnings because there could be large moves from that. But if we were looking at the earnings, which on Tesla, the next earnings report is going to be April 22nd, so next week. And so I wouldn't be putting on any trades right now. I would be watching and then taking a trade specifically for that earnings report, or I would place a trade after the earnings. So those are the ways that I like to do that. And I think that feels pretty good. Just to talk about today's market action, S&P 500 up this morning. Yesterday was kind of interesting because everybody was reporting that it was an up day, and it was, as a day trader, as somebody that's looking at the market daily, the market actually dropped. It opened at the open yesterday. It was higher than where it closed. So it was always interesting to see the after close articles and say, I was reading everything in my feed was like, oh, S&P 500 bullish day, bullish day, bullish day. And I'm like, well, I watched that symbol all day, and it was definitely trending slightly down. It just happened to close higher than the previous day, but it was actually a gap open. So this morning we didn't have that gap open. We actually opened right near where we closed yesterday, and then the price moved back up. And then it has subsequently been trending down. So we're currently trading at 53.85. If this trend continues, I can see us breaking below the low of the day yesterday, which was 53.57. So for those of you who are wondering where the market direction is, in today's trading, we have a point of control, which is very much above the current price. So current price being at 53.87, and then that point of control being right around 54.26. So higher than we are now, but the trend is to the downside. And I would expect that we will actually close as a red day today, but we'll see what happens. We're down. All the markets are down. But the VIX is also falling, which is interesting. We're seeing usually the VIX is moving up slightly when the market is coming down. Let's look at SPY. SPY as well. Again, I'm going to have a neutral outlook on that. We'll pull up the fair market value, and we'll take a look at SPY. It doesn't actually give it, does it? No, I don't get. On Investing Pro, I don't get it. Unfortunately, the way to how do you track fair market value of S&P SPY? You kind of have to look at all of the big components of it. So if we were to look at Apple, which it comprises of about 7% of the S&P 500, the the fair value is 11% lower than the current price. Microsoft, which is about the same weighting, is right at its fair value, like almost to the dollar. So this, that's bodes slightly to the bearish side if we were to look at those. Amazon fair value is above, so that would offset the fair value of Apple. And then we'll look at Google as well. So Google, the fair value currently 175, price right now is 157. So if I was looking to go long something, I would be looking at being long Amazon and long Google, but I would want to be short Apple just based on those metrics. What else do we have here? We've got Meta, which is definitely trading at near its fair market valuation, trading at 518 at fair value of 527. So if we looked back at December when it was at 736, it was hard to believe that we were going to see a 200-point down move. But now that we have witnessed it happen, that we're in a place where it's more likely than not it's going to trade sideways. Now, again, we have earnings coming up with all these companies. We're going to find out exactly what they're spending. Meta's earnings coming up April 30th. So this becomes, this next week starts the kind of the next earnings season with bank reporting. So we'll have like Bank of America being one of the first to report next week. Today, actually. Was that today, this morning? Oh, okay. I'm trying to avoid earnings as much as possible when we already have high volatility. It makes no sense to me as to take binary trades. So in general, I've been paying attention to what to avoid and not really looking at the current schedule and saying, okay, what's actually coming out today? And I haven't been playing the banks at all this year. So a bit surprised, and my apologies for being surprised about that, but a bit surprised that the earnings is today. And it actually doesn't say if it's AM or PM. Please let me know. What else can I pull up here? I'm just trying to think of what. Sometimes earnings are so elusive. Like, why is it that we can't have better ways to see exactly what happened with these stocks? Whether or not they beat or made. I'm probably just going to go over to my trading view. Should I try this again here? Yeah, it's still black. Sorry. It's showing up now for me. And it was an earnings beat. So the earnings revenue reported 90 cents. The estimate was 81 cents. So surprised by 8 cents. And they reported $27.4 billion, and the estimate was $27 billion. So surprised by 390 million. The banks are a good precursor to know kind of what's going to happen, because if the banks are winning, and it's part of why they start the earnings season, generally that means that we can tell how much money is being profited, how much they profited, which means it's correlated directly to how much money they're processing. And it generally means that those companies in general are making a little more money when the banks outperform or beat earnings. So it's a good precursor. It's good to kind of know what's going on. Bank of America up today. If we were to look at the stock price close yesterday, closed at 35.95 and currently trading at 38.23. So this would, in general, indicate a bullish momentum to the earnings season. We'll see that with more of the banks kind of coming out. Citigroup is the other one that reports quite early, so I don't know if they've reported yet, but that'll be interesting. So they beat earnings as well, surprised by 6.6%. The revenue reported was 21.6 billion. The estimate was 21.26 billion. So not like a huge surprise by 1.5% on the revenue. And but their earnings were good. So that is good overall. And both of those stocks are up, and that hopefully leads into a more bullish momentum for the stock market moving up once we get into that. SPY. What about HIMS, Rocky? Let me take a look at that. HIMS. That's Him and Hers Health. So the overview right now, we're currently trading at 28.62. The fair market value is 25.41, which is 11% lower than current. A couple of notes here. So the management's been aggressively buying back shares. That usually indicates strong support for the stock price. So that would be a bullish indicator. Another bullish indicator is that the net income is expected to grow this year. And then this week, there's been a significant return. So the market has been moving up. One of the cons about this particular stock is that it's trading at a high earnings multiple. So we really have to look at that price to earnings ratio and decide whether or not it's an appropriate time to go long or short. And again, when I'm looking at stocks like this, if I was playing something and I wanted to use options, what I might do, stocks trading at 28.66, I might sell like a 26 or 27 put on this. And that will give me the potential of making some money. If it does go up, I make a couple of bucks. If it goes down, then I'm on the hook to buy some shares, but I am at buying so closer to the fair market value. So buying an out of the money put, selling an out of the money put, selling an out of the money put around that 26, 27 level and collecting about 1% per month gives me 12% return annually. So relatively small product, could easily be traded in a small account, like a $100,000 account for like 100 shares of stock. That would give, a $2,600 position would be about 2.6% of a $100,000 account. So for those of you who are trading in those smaller accounts, then doing naked puts might work out. I don't love these small stocks for spreads because they're not usually very liquid. So it's one of the things that I don't like to do. I think these are more directional than anything. The high of this stock was back in February at $66, so definitely could run up. But prior to that, like in January, it was trading around that 25.41, which is, again, where that fair market value, just because we have run-ups occasionally doesn't mean that it's going to run up again. This could have been an anomaly. So for the most part, what I try to do is like look at that long term and say, where is the calculated fair value? What is it likely to do? And most of these stocks are unlikely to go from from $28 to $66 in a month, which is what it did from January to February. It had that huge run. It's super rare for that to happen. So I tend to load these positions up. I might buy stock and then sell covered calls against it. Because it has that potential of going up, the covered calls are usually fairly lucrative. So that's one of the things I like to do with those relatively low price stock, which is nice. Overall, I would be just ever so slightly bullish or bearish, but I would be trading delta neutral on that as much as I could. And Kevin says, good afternoon from Lakeland. Thanks for joining, Kevin. Always appreciate it. AF looks like low volume, and then looking like we're bouncing off the 536. You must be talking about SPY, I would assume. SPY 537.88. So yeah, I mean, the volume has been relatively high in SPY. So if last week the volume was huge, if we look at the volume profile, if you guys pull up SPY on your trading view or whatever platform you're using, the volume was unusually high last week, all week. We've come into a more normalized range, but today much better than yesterday. So we'll see what happens there. What else do we have? Mike Mueller, I'm okay with downslide today. I have a long condor on SPX. Yeah, I think you and I both, Mike. When we see too much directional movement, I don't love that in general. I've got an Apple condor on that I'm a little bit worried about. I wish that would come down a little bit, and we're always just playing that game. I was really excited today to show you guys a trade that is wild right now with the high interest rates. I'm gonna have to close my Discord here. Sorry about that beeping in your ear. The interest rates are high. So For those of you who play butterflies, I want you to take this this thought. So when we look at butterfly trades, sometimes we can set up butterflies that have like a 10-to-1 risk reward. So if we were going to go out into Microsoft, good example, Microsoft, and we were to look at a butterfly that is like 120 or like the July contracts around the 98 days away. So around that 100 DTE mark. If you were to sell an out of the money butterfly, an at the money butterfly right now, if you get too wide, there's some risk and there's a pretty high profit profile, but you kind of play these narrow trades, about 20 to 25 point wide. So you've got a $2,500 profit tent if you go 25 point wides on either side. And that trade right now cost only about $200 to get into it. Now it's pretty interesting what you can do. This only happens when the IV is super high and the interest rates are high. And I put one of these on this morning. So this is a fully legit trade. You can do this, but this is a trade that has absolutely zero risk. Say that. Of course there's always risk. There's a risk of assignment on the short calls, but build an at the money butterfly, call butterfly. So you've got 2 short calls at the money, and then you have a long call 25 points above and another long call 25 points below. And just look at that profit profile. So you've got a 2,250 potential profit peak, and you've got about $250 risk on either side. So you have a nice wide butterfly. If you were to take the long call, the downside long call, and replace that with a married put at the same strike. So you would, instead of buying a call, you would buy a put and buy 100 shares. If you look at the profit profile right now of that trade, you are actually paying less debit for the entry of that trade than the amount of credit that you will get when the trade closes. So I was able to put one on today that gives me a position where I have about $300 minimum profit, no risk at all. Plus I'm going to collect the dividend when it pays out. Microsoft's dividend is like 83 cents. So I give up that cash in my account. You know, it's a $50,000 trade trying to make $300. And that means that I don't get to make money off of that $50,000. So for those of you who are playing like something like Bill with your cash, this is an alternative to that. You would take that cash and you would buy the stock to collect the dividend, buy the married put, and then sell that call ratio spread above it. They're wild trades. It's like these don't happen all the time. So you have to go out fairly lengthy duration. The hope would be that the Microsoft just trades sideways and it stays in that range. If I'm not greedy, if it's trading anywhere close to the profit tent and I close this about 15 days prior to expiration, this should be able to be closed for a considerably higher profit than I would get from just holding Bill, which is like what, 4.5% right now. For Americans that are using cash or products that are paying them cash. Interactive brokers users don't have to do that. We get paid cash anyways. So there's it's a little bit of a change, but it's an interesting setup. I mean, it's very, very basic. 2 at the money short calls, an out of the money long call, 25 points above, a 25 long put, 25 points below, and 100 long shares. Just load that up and take a look. It's wild. It's a wild trade. And you can get those on anything that has high IV. And what we're doing is it's an interest rate arbitrage in a way. Okay, that's a lot of info, but hopefully you guys can you can say. They always say walk away in May. Yeah, no kidding, right? They seem to come fast this quarter. They did. Trade Desk, TDT, yes. Let's take a look at Trade Desk. I haven't looked at that in a while. Okay, I'm pulling this up on investing.com. Current price 48.42, fair market value 59.89, so upside of 23%. Positives, holds more cash than debt on its balance sheet, and then trading at a low price to earnings ratio relative to the near-term earnings growth. And then Cons are that we're trading at a high earnings multiple, and then the stock price movements are quite volatile. On the 1 year chart, Trade Desk is down 40%. If we were to look back, I was trading last April at $80.13, currently trading at 48.40. In February, it was trading at $81. So we saw a nice bullish move to the upside, a strong breakdown from February 9th to February 10th, dropping from $120 down to $80, and then has been in a downward momentum. But right now, it is below its fair value. So when it was at 120, that fair value was considerably lower at $60. Now it's trading below that. This is where what I would do is I would be looking for long delta positions, and that is easily achieved. We can buy a couple calls, sell a couple calls against that, so do some sort of ratio. I might buy 3 calls and sell 2 against it. That gives me some positive theta decay and gives me approximately close to 100 deltas by doing that. So that's one of the trades I like to do. I just sell the at the money or in the money short calls, and then I buy 3 long calls. Now, of course, there's risk to that in that if the stock keeps going down, I'm gonna lose that value. But at least the short calls are covering the extrinsic value decay. And it's a little pricier to do it that way, but I like that kind of ratio by selling 2 short duration and buying 3 long duration, rather than just buying a long duration call and having just straight decay on one of them. So that's one of the things that I like to do. Rocky says, thanks for your insight. And how do I recognize fair market value? So I'm going to post I'll post a little link, but one of the things that I have learned is that you can do fair market value calculations, or you can pay for a service. And I'm going to give you my referral link, because if you're interested in this service, you can actually get a discount. And I said earlier, there's going to be a promo coming up in the next couple of days. If you're on my mailing list, drawbridgefinance.ca, you can get on the mailing list. I will be emailing out the information once that sale starts. So if you've been thinking about signing up for Investing Pro, by all means, click on the link and go check it out. But make sure you are on my mailing list. And then when that promo starts, I think it starts in the next couple of days, and I can't release the details until the promo starts. But as soon as it does, I will give you all that information via email, and then you can sign up for that, which is fantastic. And in answer to Rocky's question, investingpro.com has a calculated quantitative fair market value, and I absolutely love it. Like, as soon as I started using Investing Pro or investing.com, and I see those metrics, it's just like, man, this has made my trading so much stronger, because I can eliminate that portion of the risk, and I can say, well, if the fair market value is well above, then I might lean longer deltas, and if it's below, I'll have shorter deltas. And if it's at it, like it is with Microsoft and Meta right now, then I would just trade a neutral trade and open up iron condors and things like that. So it's a tool that helps me. The relative cost of it on an annualized basis is negligible comparatively to the amount of money that we can make from trading options. And if it gives us a little bit of quick insight, it means I spend less time at my desk and more time putting on faster trades, and then getting out. Like this afternoon, I'm going to get out on my bike and get out there and put on a few kilometers, which is what I hope you guys are doing as well. I hope we're not all just like buried in our computer all the time, just looking at the time. We got a couple minutes left here, but we're going to pick at this. AF, today it looks like 34 million. Yesterday was 100 million. Yeah, so considerably lower volume. And that on the SPY, like some of those days, like on the 7th, that volume candle was huge. Just a massive amount of I don't know what it was, the market was up that day. So was there more buying? But man, there was a ton of movement on both the 4th, Friday the 4th, and then Monday the 7th, obviously with the tariff news. And then we saw a large volume spike again on Wednesday the 9th on SPY. Now it's come down to a much more normalized range. We'll see what happens by the end of today. But, back in February, when the market was kind of in that sideways movement, we were seeing a similar kind of volume that we're seeing today. So a lot less. But the VIX hasn't come down yet. The VIX is still at 29.92. So there's lots of potential movement. Rocky, I'm in Ontario, Canada. Elbows up. Yeah, no kidding. We're DS. Are you shorting any Canadian stocks or any other stocks at the moment? I have some slightly bearish positions. I don't straight up short anything ever. Like I don't just go, yeah, I'm gonna, go 100 short deltas. Everything that I trade has some sort of movement. So the types of things I'm looking for, I've got Celsius on, which I'm slightly short delta. But what I do with those is I'm just playing like little calendars below. When calendars work extremely well as a short because we sell the put premium, we're buying some put premium. We've got positive theta decay usually. If the market does move down towards that short put, or if we're doing like a little calendar and it's below, then the volatility on that individual stock usually bumps up, which means that the extrinsic value of the short duration short put is decaying, and we have a long long put that has a longer expiration date that is being juiced up by the increased IV. So that's kind of how I look at those. When I look at things like IWM, which is the Russell, I definitely have short deltas in that right now because I believe that with the current environment, until the interest rates switch, it's going to be tough for those small caps, and everybody should be considering moving into those larger tech names. And then so we're going to see lots of movement around those. I would expect slightly more volatility in the Magnificent Seven, obviously, and of which we kind of went over them, but Amazon and Google are below their fair value. Microsoft, Tesla, Meta are all at their fair value, and then Apple is above. So, and just to kind of put it in context, kind of where the market is in general. And as for Canadian stocks, it's so sad that our economy is the way it is. I don't know how. When you look at the numbers, it's quite depressing, and I don't know how we're going to get out of this unless we make some serious moves. And right now we've got obviously an election coming up, and we have two very opposing viewpoints as to what should happen with business. Did I not kill that? Sorry, that's my Discord peeping at me. It's just a reminder to say, join Discord by joining Patreon, or you can head over. There's free chat over there as well. I do try to give as much access to me as possible. So if you have an email, email me, and to hit me up on Discord, do all those things. And then obviously when I get in the members room and see all my actual trades, you can do that on Patreon as well. For long-term investment, swinging and settling up trades, AF, I don't know what we're talking about, Trade Desk. How far out with deltas and with longs and selling calls would you set up going long on a stock that's undervalued? Okay, so if I wanted to get long duration like leaps, I want my long calls, basically long calls when I have a long bias. I want long deltas. I buy long calls. Typically I'm buying them at least 90 days. The reason we buy greater than 90 days is because the theta decay is less. So if we can kind of perpetually roll these positions if we like, we put on a position and then we sell a short duration call against it. That will give us positive movement. If I wanted to do a synthetic stock position, because I rarely buy stocks, but if I say I wanted a synthetic stock position, what I will do is I will sell a very short duration, like 2-week short put, and then I will buy the call at that same strike. And it doesn't really matter where I do that, but usually that happens at the money. So I'm paying extrinsic value for the long call at the money, and I'm collecting extrinsic value for the short put at that position. This gives me long deltas to the upside. If I'm right and that move happens, the short put expires worthless anyways, and I'm just making money on the call. it's very good. If the market moves dead sideways, and if we just absolutely dead sideways, the short put loses extrinsic value, and then I roll that out repeatedly, I will continually be collecting more extrinsic value than I'm losing because I've purchased, say, 200, 300 day long at the money call. That is one of the ways that I like to do it. If I just want straight up 100 deltas with positive theta decay, that's kind of the easiest way. So it's a synthetic stock position, but instead of selling the put and the call at the same date, do shorter duration short put, longer duration long call. It's still just like it's a line. If you lose, you're losing the same as if you purchase stock, whatever day it is that you enter the trade. And they can kind of be leapfrogged around if you want, but for the most part, once you're in, we're hoping for a bullish momentum. So that's what I would do. You bought leap puts on the VIX. Interesting. So you just as a hedge, or you bought the leap puts rather. Okay, yeah. So you bought leap puts because you're expecting it to go down. So if they're cheap enough. I mean, one of the problems with that kind of stuff is you're buying the puts and then you're just like, well, it'll the cost is baked into it in most of these things. And definitely, yeah, like things will eventually calm down. The question is, are you able to make any money out of that? Sometimes those they look like they're a great value, and then the reality is you only make so much. I had a bunch of SQQQ positions in, which are like the triple Q's bearish positions, and which made some money when the market came down. But the problem is that I bought them too long ago. I had them in play, and the decay of having them in play far exceeded the gain that I got when they eventually worked. So your timing has to be really correct when we're doing things like buying puts or buying calls. So good luck with that. I think that in the long term, like I don't do it very often. I think that the VIX functions a little bit better with spreads than it does with just being long puts, but that's my personal assumption. Okay, I'm going to cut it today. You guys are fantastic. Thank you so much. Love doing this. As I said, if you've got any questions, let me know. And if you're not a member of the mailing list, get out there. We'll be sending out that Investing Pro discount link once it goes live. Thanks so much, everybody. Let's get rich together. Take care. Bye.